Hey folks, welcome to Quantsap. Today we will learn about broken wing option trading strategy, wherein we will learn how can we go ahead and trade this strategy when we have a directional bias on the market. So a lot of times what do we have is in mind what our forecast is that the Nifty or Bank Nifty or whatever stock we are trading, that it would go up but it will not move up like a breakout. What I mean is a breakout is something wherein you will expect a very strong or very fast up move happening in the stock, okay? But when we have a view wherein the stock will move up slowly and steadily, then sometimes it creates a problem for us trading in options. So the problem is nothing but the theta decay, right? We all know that if the theta in the market, it will take away our premium slowly and gradually, and eventually there might be a possible scenario that we might not end up making anything. So for that we have something like a broken wing butterfly strategy, wherein the outcome would be that we will be still bullish on the underlying and still we will get some theta from the option trading strategy, and obviously we will discuss the other benefit aspects of the strategy. So let me just show you how this strategy is to be constructed. So for that, I will take you to Options Architect tool in the application. It is the best strategy builder out there in the entire industry, and it is free for everybody who has signed up with Concept. So the link would be there in the description box below, wherein you can build any of your option trading strategy and analyze it. So I'll click on custom to show you the strategy. So let me just explain you this graph. So what this is trying to show us, this is trying to show us that if I am constructing this strategy, on what various levels of Nifty, how much profit or loss I would end up making. Okay. Now this is T plus 0 PNL. That means today's end of the day PNL. If I want to see tomorrow's end of the day PNL, what I'll do, I'll move the D slider to 1 day. Okay, so it is T plus 1 PNL. If I move it to 2 days, it is T plus 2. Apart from that, the best part is we are also getting to see the options open interest now on the graph itself, which is highlighted by green and the red bars. So we can see the options OI as well. If we don't want to see that, we can simply hide it by clicking on the open interest tab over here. Now let's say to construct a broken wing butterfly, what we need is first we need to buy a call option. Now another leg would be that I will go ahead and sell call option, okay, of out of the money strike price. Okay, so let's say this, but not one lot. What I'll do, I will create a strategy by selling two lots, okay, which is 100. So by the way, this is bull call spread. Now the the reason that we are constructing this strategy is theta, right? If I just go ahead with a simple call option, so if you see, this is trying to show us individual Greeks as well as the positional Greeks, that how much Greek, what Greek will be how much for the entire strategy. Now over here, if you see, the theta is negative for a long call of 736 rupees roughly, and on the other hand the sold leg is giving you 531 rupees, but still on net you're losing 200 rupees of theta over here. Now this is the problem with bull call spread, that still net you end up losing money, okay, or to theta obviously. Now what I'll do is I'll just sell one more lot, which is 100. Now this strategy would be a theta positive strategy, completely theta positive strategy, wherein I am getting money from the market just for being in that strategy. Okay. Now the problem is, so this is called as ratio spread, but the problem is that this might give us an undefined loss, right? So while constructing this strategy, I had a bullish view. I created a long call, but that will not help because the theta will decay. And considering most of us trade weekly options, it is very difficult for us to manage theta. So for that, what I did, I tried converting into bull call spread. Still, it didn't solve the purpose because it was still taking away some theta from me. Okay, which was better than a long call, but still it was taking some theta away from me. So I converted into a ratio, but the problem in ratio is that it is giving me money because of theta, but the problem is that it is giving me undefined loss. It is keeping one of my legs open, one of the legs exposed to undefined loss because I have sold additional call option over here. So now to get rid of that, what I can do is I will go ahead and buy out of the money strike price call option. Okay, so just click on add leg. So let me just, okay, so, and let me just delete it. Yes, so by the way, to delete it, I clicked it many times and that too rapidly. Just select the leg you want to delete and just click on the delete like button. So now this is how the broken wing butterfly typically will look like. Now if you keep it equidistant, this would be a normal butterfly. Now over here the problem is again, if that your view is bullish and if the market goes ahead, then you will end up making loss in this scenario, right? So to get rid of that, what we can do is we can bring the bot leg, the OTM that we are buying. In this case, it is 19,900. What I can do, I can bring it a bit closer, wherein even if market gives a breakout, still I am making money. So now the best part is that this strategy is theta neutral strategy. You are getting very marginal amount, but still you are making some money from the market over here, right? And apart from that, it is also a vega negative strategy. That means if the IVs go down in the market, then this strategy will generally make you money. So this is the reason why we will do a broken wing butterfly. Again, to repeat, most of us, what we do is, the problem is that we go ahead and create a strategy, okay, but that strategy doesn't give us a lot of returns. That is because we don't understand the crux of the strategy correctly. So over here my view is simple, that I'm expecting some bullishness to happen, but at the same time expecting a slow and steady bullishness. Okay, so that is the reason I'm doing something like this. Now if you see, there is a bar, there is a line of target level. Now let's say I want to see an 800. Okay, so now if you see, it has moved. That means I want to analyze that if it goes to 19,800, right, 19,820, then what would be my PNL? So if you see, this is where it would be somewhere around till expiry. I'll still make 5,200 rupees in the strategy. Okay, so now I'll just give you a small brief about the strike selection. The way I do it is, I prefer one strike in the money call option, and wherever my target is. Okay, so let's say I'm expecting market to go at 18,800, 19,800. I will go ahead and sell two lots of 19,800. Okay, and I'll buy a 100 points Durga call option. If my target is, let's say, 19,900, I will go ahead and sell two lots of 19,900 and buy 20,000. Okay, so this is how I will create my strategy. So important part is where my target is. Over there I will go ahead and sell two lots, and then obviously I will adjust it. More closer I bring this leg, the far OTM, more profit it will give on the upside, but eventually if I bring it very close, then still it will not make sense. It will act as same as the bull call spread. Okay, so don't bring it very close, and neither do it keep it very far. Keep it at a zone wherein you know you are getting significant returns as well, and still you are not taking a big hit on the profits. So yes folks, that was it from the broken wing butterfly. So do check out the architect tool, analyze any of your option trading strategies on single click.